Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, February the 18th. My name's Eric Wilkinson and you very well may recognize me as the Wolfman from mainstream media, where I've talked about everything from economic to geopolitical and market analysis. Well, I do about the same things in these daily market commentaries, but I layer on to that some option strategies that I find in the markets using that economic, geopolitical, and market analysis. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, with that out of the way, let's get it on with the economic data across the pond. We got average earnings index out of Great Britain coming in at 2.9%, expected to be 3.1%. Again, that's a number we'd like to see rise because that will show wage strength or wage inflation, which then leads to overall inflation. If you have more money to spend, then you will most likely spend that, and that will drive prices higher. Also, Great Britain's unemployment rate coming in line with expectations at 3.8%. Moving back over here to the United States, we got German economic sentiment coming in at 8.7%, or 8.7, expected to be 20.0. Last month's number was 26.7, so this number waning a little bit, probably the lowest number in the last 3 months, but it is above the zero line of delineation, which all of basically since 2018 has, for the most part, been below that. So good to see that number start to recover a little bit. And then we got the rest of the European economic sentiment coming in at 10.4, expected to be 21.3. Again, lower than last month's number, 25.6, but reflective of what we saw in Germany, where at least we are above zero. And for the last 3 months, we've been above zero, but before that, up to 2008, through most of 2018, we were in negative territory. So if you're looking for a silver lining, there it is. And then here in the United States, we got the National Association of Home Builders index coming in at 74, which is pretty close to in line with the expectations of 75, and that is near the highs that we've been recently seeing. We also have Kashkari speaking later on this afternoon. Actually, he's probably getting ready to go on here in about an hour. All right, that's about it for the economic data. Nothing really yesterday, as we had a bank holiday here in the United States, and it being a Monday, that's pretty light in general anyway. All right, so let's get on with the overall markets. We've got crude oil coming off just a little bit, down 43 cents. Again, it's probably going to struggle up to those mid-50s, which I've been talking about, because we're consistently seeing these builds in inventory of crude. And when we're seeing those crude oil inventories dip a little bit, it's because they're refining it into gasoline. And, you know, it's kind of behind the curtains, and we're seeing these massive builds in gasoline on the back end there. And that is because there's a lack of demand. And with the distillates going into the manufacturing process, those are seeing some builds as well. All right, gold futures up into 1600. I wasn't expecting this anytime real soon, but we're seeing this whole shift right now. Apple, one thing that they came out over the weekend and warned on forward guidance, said that they were going to revisit it in April, which is quite a ways down the road, and that due to the coronavirus, saying that it is starting to see a lack of demand there because of that. Seems a little wanky to me, to be quite honest. It looks like they're pulling at straws to find something, but the apple is falling from the tree, and it is drawing the Dow Jones down with it. All right, we've got bonds moving a little bit higher today, almost up a point on the day, seeing yields really start to dip here. Believe they are now, for the bonds, are below 2%. And then we move over to the VIX, up 1 1/3 right now, well off the lows, but also well off the highs, despite the fact that we're seeing the Dow Jones near the lows of the day. Best I saw was really that they were only down 100. That's when we were trying to make some moves higher there. One thing to note, though, we're also seeing, we're going to talk about this in a minute, the utility sector is starting to really drive higher, and a lot of this is a flight to safety. Utilities are usually the boring stocks, right? They usually pay a good dividend, so we're seeing some shift there with the bond yields coming off a little bit and high dividend yields in utilities, people kind of shifting their money to try and get some yield coming out of those different assets, and that's causing this whole sector rotation, if you will, out of like tech we would see and moving into utilities. And that's kind of what we're seeing here with the NASDAQ. You know, obviously Apple being down on the day as well, but the NASDAQ down 21 points. Did make a new all-time high there, as well as in the E-mini S&Ps. Though that happened, though, I believe overnight. We'll see that show up here in the E-mini S&Ps as they are off by about 17 points. And here you go, the overnight high, but that's a little odd. Anyway, overnight, we could, because that was on Monday's trade. Sorry about that. And then this is Tuesday's. That was on the overnight trade for Tuesday. Anyway, so we're seeing the market continually move lower as we gap down, got short inventory, maybe tried to flush those guys out right on the open on that National Association of Home Builders Index, which actually came out pretty decent. But now we're starting to see the weakness start coming back into the market as the day progresses. So not looking too good as the day goes on here. I don't really see a whole lot of recovery happening. So this is what I was talking about. This is the IDU. This is the Dow Jones iShares Index for the utilities. You can see making all-time highs and very near the high of the day as we speak. So that's reflective of that whole shift that we're seeing there. I was going to pull up the XLU, which is the spider for the utilities, and again you can see on their highs of the day. So bit of a sector rotation into a safer type of company, out of tech and into these utility stocks as we're moving on throughout the day. I just wanted to talk about Kroger because Berkshire Hathaway came out and said that they were investing heavily into Kroger. I can't remember how many shares they bought, but it was a lot. I really like Kroger as a company. You know, they've not gotten the credit that they deserve. They are very customer focused, so they actually do the pickups as well. But one of the really neat things that they do that not a lot of people even talk about is that AI software and stuff like that they're putting into these stores, they actually map out the customer journey throughout their store so that they can have people at the checkout areas well before there's ever a line being built. So the software tells them, hey, you know, these people are moving throughout the store and they are about to come to the front. Let's limit the lines, throw some cashiers up there and stuff like that. They also try to use that to do product placement and, you know, point of sale stuff. So I think that Kroger is actually a really good company. I also really love their signature brand coffees. The buttery caramel is, buttery caramel is the bomb. All right, so anyway, it is off the highs of the day after the news broke, but still making some moves. Now I wanted to talk about Disney because it broke below the 200-day moving average, and if you guys remember, I have on some synthetic longs in here with the Disney, and I am basically long quite a bit above now. I had in the 145 handle there, but I have lowered my overall cost basis by selling the 160 calls, you know, consistently since I had put this on. Now, I had recently sold those March 160 calls for about 58 cents. It's trading right now somewhere around 12, 13-ish. I'm working a bid in there to get out at around 9 cents. So I'm going to keep an eye on this. If this market comes off a little bit more, I'll probably be able to get those by the end of the day. I don't want to pay more than a dime for them, so I'm just below that by a penny. I'd rather have the penny than the trade, I guess, at this point. So if the market gives me a bounce or something like that, then I'm going to continue to roll these calls out in time. And you know, if it continues to move a little bit lower, I might have to move closer to that 145 handle. But that 160 handle was such a sweet spot because that would have been a 52-week high. And with this coronavirus going on, it's going to wane on their earnings. So I might have to start ratcheting those down a little bit, but wanted to keep you guys on track as to what I am doing here in the markets. And, you know, for the most part, that's about it. I do have to start throwing this up there now. This is the disclaimer that says that any opinions, news, research, and analysis, Take a moment to read over that so that you know that past performance is not indicative of future results. That's all I got for you guys, other than if you can't take that, take it easy.